Hey everyone, it's Tom here. Today I want to talk about the best times of the day to trade. Now this might seem like a fairly complex topic and something that's going to be quite difficult to cover in one video, but what I want to focus on here is relating it a little bit to the strategies that we use, but looking at when traders can take advantage of specific times in the market and also how to plan your trading really around your availability and finding a pattern and a trading style that will work best for you. So we're going to get into a little bit of strategy discussion, but it's going to be quite light, and I'm really just going to talk about the different periods of the day and the different styles of strategy that will suit each of those times. So let's get into it. Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So let's start by covering, the first thing we should always look at in terms of good times to trade, and that's around session opens. When's the most activity in the market? This links back to a video we recently did which covered looking at spreads and margin rates, etc. And looking at session opens tends to be the best, on most brokers anyway, the best times to get the lowest spreads, the most competitive rates to get into the market with the least disadvantage for us traders. And the most liquidity, if you've watched that video as well, hopefully that was clear. But that's when most traders will be looking to place their trades, which is understandable. Obviously the volume snowballs, it encourages more traders to get trades placed, the market moves quicker. So how do we find these areas? You might think, okay, it's clear, I'm going to trade around the open of the market, but what does that actually mean? So let's have a look at a couple of ways we can check that as traders. So we can start by looking online for these kind of indications, and there are a couple of websites out there that I really like. There are plenty out there to tell you session opens. Forex Factory is certainly one of them. You may be familiar with this. It's quite a popular website for traders, but certainly on their main page, amongst kind of many things that Forex Factory does well, I would recommend checking them out certainly. If you go down at the bottom, they've got a session timer. This is in my local time, which is just after 5 p.m. right now, and it tells us we're in the middle of the New York session, which we would expect in terms of the timing. Obviously, it tells you the times there for Sydney, Tokyo, and London, the main sessions in the market. Another website that I think is really good, babypips.com. If you go into their tools up here, I know we've looked at this website previously on videos as well. Forex market hours down here, it gives you just a run through and a handy little trading volume. I mean, take this with a grain of salt. I mean, overall, it's going to be fairly accurate, but they're just giving a general outlook of volume across the market. So in terms of specific markets, it's not going to cover each one exactly. And that's where we need to be a little bit more detailed. So, we can go into our trading platform, for example. So I'm on IG here. I've loaded up the Dow Jones, and I'm just on an hourly chart. I've loaded the volume up, and it's clear to see, where those spikes in volume's coming from. And then we can target down to see basically where the most activity is, where the sessions begin, where they end. So again, this is in my local time, but if we look through the Dow Jones, we'd expect, again, the market to start generating some volume, start generating some trading activity when the proper session opens in New York in the morning, which is my early afternoon, which relates to where this hourly candle's forming. And of course, we can go down intraday. We drop down to the 10-minute chart, for example. We can see in even more detail that there's that spike in volume there at 2:30 in the afternoon UK time. And that'll be repeated if we go back and have a look each day. It's going to be a similar pattern on these main markets. So to start with, in terms of what we can look at as a trader for the best times to start looking at trades, the session opens are always a great place to begin. If you're able to trade those, obviously, some traders might not be able to hit, say, the New York Open, depending on where you are in the world or other commitments. But then could you hit the New York Open? Could you hit the London Open if you couldn't hit the New York Open? Could you hit, basically the Asian sessions? So depending on where you are, depending on your circumstances, hopefully one or more of these main sessions will fall into a time that you're able to trade. But let's now move and talk about kind of trading duration and actually when we need to be at the screen for those trades. So let's stick with the Dow Jones for this next part. I'll just move the volume down a little bit so we can see the chart a bit clearer. So let's say you've identified a major session open that you can trade. You've got some time there. But then the next question is, how long do you have available to wait for that potential trade entry to come along? So is your strategy based on getting in exactly at the open? So you know the exact time you're going to get into the trade each day, the open of that session? Or is it a strategy that you're going to have to wait for a specific signal, something that happened in the market to tell you that that entry is valid there, and then you'll take the trade? For most traders, it will be the latter. There are opportunities, there are systems to take exactly on the open, depending on the criteria, but more traders will be looking at certain indications within the price action or using indicators themselves to identify an area to take a trade when a setup is valid to take. So that is the second part. And along with this, we should also consider, are you having to manage your trades? We'll come on to that in a minute. But first, one thing that we'll always consider, how long do you have available? So if the market opens here, if I'm looking at the Dow Jones at 2:30 in the afternoon for me, how long do I have? If you say I'm available at the session open, but I really don't want to be there for a whole hour, how likely is it that I'll get my trade opportunity in that first hour? I'm on a 10-minute chart here, but if you're on a 5-minute, obviously more candles there, so potentially more opportunities. If you're on the hourly, then it's less likely really, because you're relying on that first candle forming and then exactly on the hour to take that trade. So that's another thing to consider for traders. And this is where it comes into finding a strategy that's going to fit around you. So not necessarily, trying to force a strategy into where you're available, but as understanding, okay, I've got this time available. I don't want to be rushing. I don't want to have to take a strategy where I'm inconsistent, where I'm missing trades because maybe they're coming up too late. So that's an important thing to consider when you're looking either to develop a strategy or work with an existing strategy. The other thing that I mentioned a little bit ago, managing your trades. And I want to focus on this because as mechanical traders, and the way we trade at WB Trading, this is one thing that we always focus on removing, and this is a core concept of mechanical trading, is what we call the set and forget approach. What that means is if you place a trade, let's say we do place a trade exactly at 2:30 here at the open of this candle, we set our profit target, we set our stop loss, and we set and forget. What that means is we don't do any management of the trade while it's live. So the time you have to be on the chart simply goes from when you start observing and checking the candles, so maybe exactly on the session open, to when your entry is triggered. After that, while the trade is live, you don't have to do anything. We establish as mechanical traders, there's going to be one of two results. It's going to hit profit or it's going to hit stop loss. We don't need to interfere with the trade. We don't need to manage it. For some traders, you'll think, okay, Tom, that's a bit of a disadvantage. I want to be able to react to what markets are doing. And okay, for some traders, that's understandable. That is a way that plenty of traders will trade. But as mechanical traders, one of the benefits is that my time on the screen is drastically cut down. So that is another important consideration, that if you're not going to trade mechanically, if you're going to trade using, maybe price action or however you're going to trade it, and then manage the trade, moving your stop loss, moving your profit target, etc., manually closing the trade, factor that time in as well. And for some traders, that's fine, but for some traders, that's quite detrimental if you're going to have to sit there for another hour or 2 or 3 or whatever and watch that trade, even intermittently. If you have to check it ever so often, factor that into your decision in terms of what can I trade consistently. It's an important concept to remember, and quite a lot of traders that I speak to when they're just starting out, they don't really grasp how important that part is. So it's worth considering, definitely. Now at this point, I've tried to reinforce the idea that, looking at those session opens is a key concept of finding the areas where there's the most liquidity, there's tighter spreads, there's better opportunities overall for traders. But you might be thinking, I'm not going to be able to hit one of those consistently, Tom, so is there a point in me trading? Well, on certain markets, it's going to matter more than others. And I want to do another example here, just on pound dollar, so on a major forex pair, to show you the impact of the volume on the forex market against something like the Dow Jones that we looked at a little earlier on in the video. And you can see that, okay, there are those peaks and troughs in the volume down here, but it's a lot more level. And that's what we would expect from the forex market being open 24 hours a day, being popular in all the major sessions, and therefore there's a little bit more flexibility. It's not much, but if I was a trader and I was struggling to trade one of the major session opens, forex would be where I would turn to. It's, again, solid volume, certainly the major pairs, tight spreads as we've been through on that video we did previously, but the barriers to entry are a little bit reduced on this. So if you're thinking after that first part of the video, it's a bit of doom and gloom, I can't trade one of those consistently, Forex may be the answer there, just to allow you to get some more consistency in your trading. So, and we can look at other markets. In things like commodity markets, obviously they have the definitive, session open and close. Crypto, I don't want to go too far into crypto because it's not a sector of the market that I touch, but that is open 24 hours as well. You will see volume fluctuations similar to what we see on Forex. So there are market sectors out there that will work. And, over the years, I've worked with plenty, hundreds of traders that aren't able to hit major session opens because of their job, because of the time zone, a variety of factors. So all it takes is, again, to be finding that strategy that's consistent at the times that you can trade and fitting trading around whatever else you need to do to make sure that you're not panicking, you're not missing trades, you're not inconsistent, and that's just going to lead to stress if you are. Now let's have a look though, because all we focus on here is like that intraday opportunity and hitting those specific opens. Let's have a look at what we can do on longer term trading and how flexible that is for traders. So I'm on the daily chart now. We're going to stick on pound dollar just for this example. And I'm going to talk about the type of strategy and the type of approach traders would use if you were going to look at a longer term trading approach. What I mean by that is we're talking away from intraday, away from session opens, etc. We're talking about looking at things on, say, the 4 hour, the daily, even the weekly chart, for example. And this type of trading, while some traders really dislike it because it's too long term, you're holding positions overnight, sometimes over the weekend, it adds quite a lot of flexibility, I think, for traders because we don't have to be at the chart at a specific time. So I'm just going to create a very generic example here. This isn't a strategy that I use, so don't think, oh, these are the rules that I need to copy down from Tom. But let's say we're going to look at trading, off support and resistance areas. And again, if you're familiar with trading support and resistance, you're probably going to be shouting at the screen with what I do next. But I'm going to make this as simple as possible just to give you an idea of how flexible we can be in terms of the times that we can trade. So let's say we've got this recent high here from December. I'm just going to put that as a horizontal line. Again, not doing any extreme analysis here, so take it with a grain of salt in terms of the strategy rules because this is just very generic. But the key point here is when can we enter these trades? When can we do the analysis? So something like a daily chart, and I trade daily charts on some of our mechanical strategies, as do a lot of our traders that join us. And I always advise, do the analysis on the evening when you're free. If you've got some time, the strategies that we use takes me about 15 to 20 minutes to do analysis on a few markets and to look for potential entries. So something like this, we might come along and say, well, there's a recent high, where's the recent low? Where's the support zone? Well, maybe, one down here, for example. Is it a bit of resistance there? Again, we could do a lot more analysis on this, but it wouldn't take us a huge amount of time to do per market. And then what we're looking for, obviously, is the entry signals. But because it's on the daily, we don't need to be there at the session open. What we can do is we can say, well, okay, as the candles are approaching here, let's say this candle on the 18th of Jan, it's crossing over our resistance line. What's our rule to enter? Maybe the rule for entry is, if it's a false break, so if the wick goes over but the body doesn't, we're going to enter short and we're going to go trading it down towards the opposite, the support zone down here. Well, getting this trade placed then isn't a case of having to be on the market at a particular session time. And what we could also do is to actually just set an order up. Let's say, what we're going to do is sell the market when the market next hits this resistance level, so this 1.242. And that would be, basically that would be our entry point. And so, again, we don't even have to be on the market when the trade is triggered, which would have been this candle here. We can have that flexibility to do it on an evening. And most traders, hopefully, you would have, say, 20 to 30 minutes available. It doesn't have to even be on the evening. It can be whatever time throughout the day, just to do that analysis, to get those orders placed in, and the market will trigger the broker will trigger the trade for you. And okay, we can even do a little bit of trade management, obviously, as the trade is live. Because it's on the daily, we've got the flexibility to check through. We don't have to be there on that high liquidity, high volume periods of the day where there's a lot of market activity intraday. and we want to take advantage of that. This is not the best term, but a more laid back trading approach. It's a bit more relaxed, and it allows us a bit more flexibility. So for traders that are really struggling with things like getting to the market every day for an hour or two at a session open, this could be an opportunity. And to be honest, as I said, for a lot of our traders that I've spoken to over the years, this kind of approach they favor over the intraday style. It has its advantages, disadvantages, but for traders that they're just pressed for time, basically, this could be a great alternative. And as simple as this explanation was, hopefully you'll be able to see what we're talking about in terms of adding a little bit of flexibility into your trading and trading around your other commitments. So that was everything I wanted to cover on today's video. I'm really hoping that if you've been struggling to hit, a certain time of the day to trade, or even find a time that you think is going to be suitable, then hopefully that's given you a bit of clarity there. Certainly, what we mentioned then, we touched on briefly, finding the right strategy around when you can trade is just as important. I might cover that in a little bit more detail in a future video, but it's a case of finding the time for you as an individual. And if you talk to a trader, what works for them might not work for you, etc. And don't be concerned about saying, well, actually, I'm just going to do my trading, on an evening. If I can hit those daily charts, I can find a strategy that works for me. You don't always have to be, on the 5 minute, on the 1 minute chart, trading intraday on those session opens. It doesn't work for every trader, is the message I'm trying to get across here, certainly. If you've enjoyed that and maybe you'd like to find out how we trade a little bit more, how the mechanical strategies work, book a call with one of our team. The links are in the description. But other than that, thank you for watching. Hopefully that's been useful. And yeah, I look forward to seeing you on the next video. Thanks.